Hey folks, Joe here with a quick market update on Sunday the 19th of March. We are hopping straight into the DAX weekly chart, and as you can see, DAX found support at these December highs out of last year, and there was also that 100 weekly moving average. DAX bounced off there quite intensely on Thursday. We rallied all the way up to these lows at 15,150 out of Feb. And then we started selling again after OPEX, and we made a close at 14,768. However, we are on week 24 of that primary cycle, which is quite late. And in my understanding, DAX is looking for a base here. And we are hopping into another weekly. That is that impossible inverted shoulder pattern. And the last time I was showing that, we were somewhere here, and I said I would love to see a pullback or a retest, a back test on that neckline, and have a look what happened last week. We hit that neckline on the dot at 14,664. And I can tell you one thing, as long as the supports here is holding, we have to take that thing serious. And another supportive argument is out of the daily, because we made a kind of triple bottom on the daily lows. We got 14,702, we got 14,664 and 14,694, and we are very close and in the time frame of that cycle bottom here as well. And by the way, we found support on the 100 daily MA as well, and we bounced off there on the dot also on Thursday. And we're looking at the smaller time frames. It's a 1 hour chart. You see that falling bullish Wilbur wave wedge. I was showing that sometime here when we were on the way down here on Monday, or that was Wednesday actually. And in combination with that lower low and that RSI divergence, we got that very strong bounce, but then we kept selling again. But have a look at that zone here. I mean, even on the H1, you see it even better. That supportive zone between 660 all the way up to 750. If this holds, again, we could move all the way up here to 15,300 in the first place. And also the short-term cycles actually suggest a bigger bounce, or at least that model. I had to adjust it once again because they become kind of hard to read at the end of the bigger cycles. But this one here is still on the time frame of that blue cycle down here, and it actually suggested that deep pullback. And now it wants to see another even stronger rally to the upside. And for the bears, I still have that bearish cyber pattern. I said in this red zone there should be some kind of rejection, and we got over 1,000 points now to the downside and to that 23.6, which is the most bullish consolidation level. And usually these patterns, they retrace into that box here between the 38.2 and 61.8. If that is still the case, we will see. If the market remains to be very strong, that might be it. And I was giving you that impulsive rising wedge last week as well, in combination with that shoulder pattern. You don't see it that well here on the daily, but it is one, and it broke through that neckline and it closed below that neckline. However, you see here that triple bottom even better, and as you can see, they found support at that 50% retracement from that leg from December to that high at 15,708. So that could be a fake move here to the downside, and next week we just reverse the whole thing. However, the minimum target here still waits at 14,493 of that shoulder pattern. The 100% move would be at 14,098, and the minimum wedge target would be at 14,150. By the way, here that circle in yellow, that there was a lot of volume traded in December and November, and we talked about that was that high that CPI spike in December, and we found quite strong support there. Yeah, and the last thing I wanted to show you is the VDAX, the volatility of the DAX. And as you can see here, that blue wedge was firing. It hit that target line already on Monday. That positive RSI divergence worked quite well, and that red wedge is also firing to the upside. However, there's a study of myself which shows, and I put the Bollinger Bands on for that. Whenever we move out of the Bollinger Bands like that, unless this is not a crash, and I don't believe we are in a crash right now, the index, though the DAX performance, is usually looking for some kind of bottom, a short-term bottom or a long-term bottom. I can't really tell, but usually there is an intense reversal whenever that happens. Concerning volatility. And before we start with the US markets, I would like to show you 3 stocks. The one you see here is NVDA. It's a daily chart. We have that inverted shoulder pattern. It fired brutally to the upside. It hits the minimum target here at 245, and the 270 target is still open here. That would be the 100% measured move. On Friday, there was actually quite a lot of selling pressure also on the volume, but and there's also that reversal candle, and we have that rising Wilbur wave wedge now. But especially NVIDIA, they really like to do these moves, especially when you look back in 2021. We had rallies like that over and over again. This one here is Meter Platforms, also a daily chart, and my call here from $100 worked out. Yeah, it almost doubled by now. Actually, at that peak here, we doubled it already. We hit that first target line already, and we found support there, and we kept rallying. There are another 2, and if things continue in the tech stocks like last week, actually pretty good chances that we run all the way up here. Yeah, the last stock is Apple, also a daily chart, and I saw a lot of people showing that inverted shoulder pattern. You also see it here on the daily. At first, I didn't really like that pattern because these formations, they usually occur at bottoms and not like in between, like a impulse or like at the top. However, I saw that bigger one right here, and this one occurred at the bottom, and this one occurred also at a bottom at the beginning of January at a cycle low. And once you have a look at these targets, these are the targets for that smaller one here, between $165 all the way to $168, and the big one would get us almost to new all-time highs between 181 all the way to 190, which would be an all-time high. And I wanted to show you these cycles, and Apple is actually moving very precisely on them. Not like on the dot, plus minus like 2-3 weeks, but even that low got made right here at the end of December. That low was suggested, and we got the low in at the 30th, so that was actually quite close. And the next low was actually suggested at the end, or in the middle of summer, at the end of July. And since we're not even halfway through, and if that resistance line or that neckline breaks to the upside, there might be another crazy rally at Apple. Yeah, we're going to have a quick look at the US markets. I wanted to show you that Dow theory divergence. Up here you see the industrials, down here the transports, and that thing is still valid. We made a lower low at the industrials when we kept selling on Friday, and the transportations actually are holding these lows, and we are still staying above those, which makes it a positive divergence in the Dow theory. However, that symmetrical triangle which fired and backtested that trend line, still has targets open here. The 100% measured move would be at 31,198. And while having a look at these cycles, the Dow also got like a kind of indecisive doji at the bottom, which could be a turning point on the weekly. We are on week 22, which is also pretty late. It's the second last week, usually of a primary cycle, which could lead for a turnaround. And this is a 4-hour time frame based on the cash market, and in my point of view, we saw an A move to the downside, an ABC as a B to the upside, and now another ABC to the downside to finish off a C leg, and we have that falling bullish Wilbur wave wedge, which has its target line at 33,769, and we found support at that 50% retracement here at that 31,700. There's also a quite intense positive divergence. We also have that on the daily. And this is a 15-minute time frame based on the cash market. I was posting that cup and handle here on last Thursday. We hit these statistical targets, and have a look at this line here at 32,283. That might be a potential neckline of an inverted shoulder pattern if we reverse all that selling pressure on Monday. Yeah, a little different story at NASDAQ. The only chart I got for you is a 4-hour time frame based on the futures. There's this descending broadening wedge which fired already. It did its pullback, and then it fired on already on Wednesday, and we have open targets at 12,861 and 12,995. And while having a look also at the volatility at NASDAQ, the VXN, there was that bullish Wilbur wave wedge here, which hit its target line with that move on Monday. And since then, they are starting to, or they are trying to crush volatility again, at least on the NASDAQ. It's a different story on the NASDAQ than at the industrials or the value titles. And the S&P is somewhere in between. And this is a S&P, by the way. We had like a steeper symmetrical triangle on there first, which didn't really work out, but I want you to pay attention on this one here. If this one actually gets triggered, we have to run all the way up here to 4163 to trigger that symmetrical triangle, and have a look at these cycles here at the bottom. This one suggested a low at the beginning of March. We got that a bit later. It's still in the time frame for a rally and also fits that primary cycle. It's also in week 22. Same cycle. This one is actually more precise. This is a 4-hour time frame, and that model suggested also a rally, by the way, last Monday, and we hit that on the dot. Yeah, that's about it. I don't really have much time, as you can see, so we had to rush through there. I wish you all the best for next week and have a nice remaining evening. Thanks for watching, and bye-bye.